All right, let's get right to it. For all the treasury managers, strategy officers, and financial experts joining this explainer today, we are diving straight into the mechanics of what is easily one of the most ambitious infrastructure initiatives happening in the global financial system right now. We're talking about Project Agorá. Now, we're going to skip the basic definitions of blockchains or digital assets because I know you already know them. Instead, we're jumping straight into how this specific public-private collaboration plans to tokenize wholesale cross-border payments. Make no mistake, this isn't just a software update. We are talking about a massive structural shift in global finance. But before we look at the solution, we really need to validate the reality you deal with every single day. We are talking about slow, costly processes, opaque networks, and heavily siloed liquidity. You know this pain all too well. Managing cross-border liquidity today, well, it often feels like playing postal chess, doesn't it? We've got complex, sequential processing that delays transactions and severely complicates cash and treasury management. It literally forces you to lock up liquidity just in case something gets held up somewhere in that long correspondent banking chain. And these frictions don't just annoy operations teams, they actively weigh down global trade and constrain financial innovation across the board. So Project Agorá steps in, proposing a massive architectural paradigm shift to solve this. Think about our current architecture, the one giving your back office those constant headaches. It relies entirely on sequential processing across fragmented, siloed ledgers. Bank A messages Bank B messages Bank C, and everybody has to update their own books independently. It's wildly inefficient and honestly highly prone to settlement failure. The Agorá vision replaces that entirely with atomic, multi-currency settlement. That means instantaneous delivery versus payment. Both legs of a cross-border transaction clear simultaneously, completely wiping out the settlement risk and the agonizing time delays of the old, fragmented system. So what exactly is it? Let's formally define what we're looking at here. Project Agorá is a unique public-private collaboration, and it's convened by two absolute heavyweights, the Bank for International Settlements, or BIS, and the Institute of International Finance, the IIF. Now, at its core, it's an exploration. It's a test of the desirability, feasibility, and viability of a multi-currency, shared, programmable platform specifically built for wholesale cross-border payments. I really want to emphasize something important here. They aren't just dropping a finished product on the market today. Rather, they are rigorously testing a prototype to ensure it actually meets the extreme, zero-tolerance demands of global finance. And let me tell you, the momentum behind this is absolutely unprecedented. We are looking at the active participation of 8 central banks, and those 8 banks represent 5 of the world's major reserve currencies. So we are not talking about some small, localized sandbox experiment here. No way. This is a prototype backed by the very institutions that issue the world's core liquidity. The sheer scale of this public sector involvement sends a very clear, undeniable signal about the future direction of central banking. But as we all know, a network is really only as valuable as its participants. Well, over 40 leading private financial institutions are actively jumping into this partnership convened by the IIF. And for you as financial experts, this is a crucial takeaway. This isn't just some academic exercise cooked up by central bankers operating in a vacuum. The commercial banks, the actual users and market makers handling the daily, heavy lifting volume of global trade, they are deeply embedded in testing this prototype. It's a true, grounded synergy of public oversight and real-world private sector operational reality. Let's get under the hood and look at the mechanics of this shared ledger model. It essentially works in 3 steps. First, tokenize central bank reserves. Second, tokenize commercial bank deposits. And third, unify them on a single shared platform. Now, why does this specific structure matter so much? Because it perfectly preserves the 2-tier banking system we already rely on. By recording both tiers of money together on a shared platform, Project Agorá maintains all the safety, trust, and reliability of the existing system, but it completely upgrades the engine underneath to unlock entirely new technical capabilities. And what exactly are those new capabilities? Well, it's the holy grail of payments. We're talking about enabling atomic, multi-currency settlement on an around-the-clock basis. In a shared ledger, the transfer of tokenized commercial bank deposits and the corresponding settlement in tokenized central bank reserves happens in one single indivisible action. Plus, doing this on a 24/7 basis completely eliminates the friction of time zones and limited clearing hours. It becomes an always-on system that radically, and I mean radically, optimizes how you can deploy and manage capital globally. But it goes far beyond just speed and continuous operation. The platform actually brings intelligence to the money itself through smart contracts. Imagine being able to embed workflow logic, integrate compliance requirements, and enable conditional payment triggers directly into the transaction protocol. For the strategists and operators listening right now, this promises a massive, game-changing reduction in manual reconciliation burdens. Think about it. Today, cross-border payment failures usually stem from post-trade compliance checks or clumsy manual interventions. By programming these directly into the tokenized transaction, you almost entirely eliminate those operational frictions. The compliance is literally baked right into the payment. Of course, any seasoned financial expert knows that technical brilliance is completely useless without strict regulatory compliance. And don't worry, this prototype isn't operating in some Wild West legal vacuum. It rigorously explores strict adherence to settlement finality laws, incredibly robust anti-money laundering and countering the financing of terrorism frameworks, as well as comprehensive data privacy standards. Project Agorá is explicitly designed to marry this cutting-edge technical innovation with the stringent, non-negotiable legal realities of global banking. Which brings us to the culmination of this explainer. The prototype has successfully demonstrated its potential, and the project is now definitively advancing to real-value testing. That means moving out of a controlled lab environment and executing real-value transactions involving specific currencies and actual market participants. The transition from pure theory into real-world application is officially underway. Make no mistake about what you should take away from this. The fundamental architecture of global money is changing right now. The era of fragmented ledgers is closing, and the absolute new standard for wholesale finance is already being built.